Welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. I'm talking to Martin Kostuik, CEO and Director of Battery Mineral Resources, a Canadian mining company focused on battery metals with projects in Chile, Canada, and the US. Hi, Martin.
Hi, nice to meet you.
Nice to meet you. So let's start our conversation with just an overview of the company and your priority projects.
Yeah, I'd love to provide that. Battery Mineral Resources, as you mentioned, is a mining company in the junior mining space. We've been a public company now for a little over 2 years. We trade on the OTCQB in the US and the Toronto Venture Exchange as well. It is our goal as a company and as representatives of the shareholders to provide our investing community with exposure to this global electrification trend that's going on around the world. And I think everybody's certainly aware of the potential and the projected growth in electrification going on, especially with the advent of the popularity of electric vehicles, not just cars, but other types of vehicles. That has a big component in the growth of electrification going on around the world. And it is our goal to provide exposure via the commodities that we represent, and you mentioned a few of them around the world. We represent cobalt in North America, we have lithium in North America, we have graphite in South Korea, and most recently we have copper in Chile. Those commodities are all expected to be in high demand and in short supply in the coming years to serve and feed this electrification trend that's going on. And I think finally the point I'd like to make very clear is that it's not just exposure that we're giving. Our intention is to provide value through that exposure, and the value is going to come in the form of us as BMR, as a company, transforming itself from where it is now as a development style company and entering into becoming a cash flowing company.
Can you expound a little bit more on that in terms of the strategy to reach those goals for, increasing shareholder value and achieving your strategic visions?
Absolutely. Our goals are going to be achieved via the resumption of operations at our most recently acquired asset, which is a former producing underground copper mine in Chile. This mine has a 10-year operating history. It operated as recently as April of 2020 and has been on care and maintenance since then. The mine was started by Glencore and operated for about 8.5 years. It was their first operating copper mine in Chile. They, of course, grew as a company, and their production profile increased tremendously, such that the production profile of this particular mine, which is called the Punitaqui mine, became non-core for them, and they looked to sell it, which is exactly what they did. In November of 2018, they sold it to our predecessor, who then operated it for as long as 18 months, but eventually had to close it down due to lack of cash. And primarily that was because they found themselves in a very steeply declining copper market over the months, and essentially closed the mine when copper hit $2, and they simply didn't have enough revenue to cover their expenses. But job one for us is first of all, allocating the capital and resuming operations at Punitaqui. And that's going to be very exciting for shareholders because we will be one of only 2 companies putting a copper mine into production in 2024. So that's exciting news for us, and the potential cash flow that this operation will bring is tremendous relative to the size of the investment. So I think all those things together will be very exciting for our shareholders.
So maybe this is a good time to talk about the Punitaqui project. So what makes it a very compelling project for you, and how is restarting that going to increase shareholder value?
That's a great question. Punitaqui is a very compelling investment, and I think I'm speaking for our shareholders in this regard, because for one reason, it has a very long and successful operating history, and because of that, the amount of capital that's required to put it back into production is quite reasonable compared to the amount of cash that it's going to generate while it's operating. Not only that, but for our investors and for our company, it was a very low price point to enter into this The acquisition of the assets at the Punitaqui mine essentially cost us around $12 million. Because of the operating the recently operating history of the mine and the capital that was allocated there over the years, really spells out the fact that it's a very modest investment to put it back into production of around $13 to $14 million. And again, because of the nature of the business that it was recently operating and all of the fixed assets that a mine would require are there and existing and available for use, all of that means that the timeline to put it back into production is quite reasonable. So once we start allocating capital to restart the mine, we're looking at 4 to 5 months before we start generating brand new revenue. So all that together, we believe, means low risk for our investors and a nice return, because the mine historically generated anywhere from $30 to $50 million of EBITDA per year. And we expect our results to be much the same.
And in terms of funding this project, so could you talk a bit more about your funding strategy and your current treasury situation?
Yes, well, that's a great question. We as managers of the company have always been very aware that dilution for shareholders is something that's undesirable. And when we're putting together a scheme to fund this into production, we keep that in mind. We keep in mind that dilution is something that shareholders don't want to be a part of. And so as a consequence, we have a 3-part process that we're going through to bring funds into the company to put it into production. One part is a convertible debenture. Another part would be a small piece of debt against the cash flows of one of our operating entities, which I'll have to talk about in order to put that into context. And the third leg of that stool would be a piece of debt against some of the assets down at the Punitaqui mine. So those 3 things together, 2 pieces of debt and a convertible debenture, would be our means for bringing capital into the company for the restart. Now, having said that, when I mention operating entity, and I just want to take 1 minute to describe to the viewers what I'm talking about. During the process of becoming a public company, our largest shareholder, which is a private equity firm based out of New York, had the vision that while we're developing and growing the company, we would have need for cash. And again, sourcing cash in a non-dilutive manner is one of our goals. So they had the vision that they should roll this company into ours during the process of becoming public. It also was a portfolio company of theirs. This is a oil and gas and renewable energy services company based in Phoenix, Arizona, which produces anywhere from 3 to 5 million in EBITDA per year. It is 100% wholly owned by Battery Mineral Resources, and it generates cash that we use very, very, very well. For example, it funded our drill program that we had down in Chile, rather than going to the shareholders for raising equity. So in a way, we are already a cash-generating company because of our 100% wholly owned subsidiary. But suffice to say that that company then becomes important in terms of bringing in some debt against the cash flows that they have. So that's one leg of the stool.
And you mentioned you have other projects in other parts of the world. Do you want to sort of get just an overview of some of those and why those are?
I'd be happy to. We're very proud of these projects. They are overall, I would say, they are in various stages of development, none of which are as close to production as our asset in Chile, of course, which was a former producing mine with all the assets. So starting in North America, we talk about cobalt. We have the largest, I would say, set of cobalt claims in Canada, and it's in Northern Ontario, proximal to the town of Cobalt, Ontario. We've had those assets for several years now and have done some extensive exploration on some of those claims. We do have a nice feather in our cap there in the form of a brand new resource that we came out with a couple of years ago as a result of the Euro program. The first resource of cobalt to be had in many, many years. It's a little over 1 million pounds, very high grade cobalt. And so that is just a a set of properties that just beg to be explored further to add to those. We have a property in northern Idaho, which is also a cobalt property, but it's very interesting because this is a former producing area also, and it's in northern Idaho. These properties are not just cobalt, but they also have value in gold and copper. So the material in the ground is quite valuable if they're in economic quantities. And our property is drill ready. We've done all the work that's required to make the property drill ready, including sampling and geophysics and whatnot. It is contiguous to a property that's being put into production right now by a company called Jouvois. So we're very excited about that property. I believe a small investment there could bring in some great value to BMR. We can move over to graphite, which is in South Korea. We have 2 former producing graphite mines there, which are inactive, but at one point served the graphite industry in South Korea, which is, by the way, very vibrant and very vertically integrated. They produce graphite, consume it, make batteries, and other graphite products. Those projects are waiting for investment to be made. The next steps would be further metallurgical testing and growing the resources. And since the advent of China recently announcing that they're going to severely restrict, in many cases, the export of graphite from China, which is more than 80% of the world's supply, I think the attention is going to be turned to deposits that are outside of China, including ours. So that's a very favorable position for us to be in. And finally, we have a very early stage lithium brine project in Nevada. The project itself is in the same basin as an operating mine, which in fact is the only lithium operation in North America. So we're very happy to be in that neighborhood with a very nice land package that's just begging to be explored.
Going into 2024, which is a couple months away, what can the investor community expect from Battery Mineral Resources over the next few months?
I think it's very clear what the investor can expect is that we continue to bring in the capital that's required to restart the mine. We are currently in the process of the pre-operational activities, so we're going to continue those activities. And if we can stay on schedule and bring in the rest of the funding required, which I'm very confident we will do, then the investor can expect to see production coming out of the mine in late Q1, early Q2 of next year.
Sounds great. Well, thanks again, Martin, for your time and sharing your insights today.
Thank you for your time and for the great questions.
And thanks, everyone, for watching. Join us again next time for another engaging conversation on CEO Insights. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. See you next time.